we're going to go over a trade review that we took on the micro and on the E-mini. So first things first, we had on the 1 hour chart, if we're looking to the left here, this is all pre-market movement. So if you go to regular trading hours, this is just a big gap in the market, okay? Now, I had anticipated that we'd at least come back to 39.50. Why? Because if we're looking at a daily chart here, you know, I don't anticipate this candle to turn into a complete bullish candle. It could, but ideally, if we're looking at the weekly review that I sent out, and if you were at the midweek review yesterday, I said that this is a scenario that could happen, that we'd come down to this weekly order block on a Thursday, typical reversal day, and give an immediate rebalance here. Now, does that mean that we're going to close this week bullish? I don't know, but the reaction is anticipated because we're in a bullish macro. So with all that said, when we get down to the 1 hour chart, what we're looking for the regular trading hours, what we're looking for is for price to create this swing low right here. This 3 candle pattern where the middle candle is trading the lowest, we're looking for this to happen in our morning session. Now, when we have that candle formation happening, what I'm going to go ahead and do is go down to the 5 now. You can see what happened here. We run into that weekly order block, entered here. This was a mistake, didn't mean to get out, but I re-entered anyway because it was an order block. You'll see that they've kind of stood in this range here, and now I have the 1 minute over here on the right, so you can see they kind of stood in this range. And when you see this kind of thing happening, you can't get worried. I understand it's hard to see an entire bearish narrative playing out into the morning session, but when you hit weekly levels, you got to trust your analysis and say, hey, there's framework, there's logic. Now we need to submit to time and wait for market structure shift and return to origin with displacement to the upside. That's the signature I trade. So this entire movement, I was holding this with my stop originally down here. When they broke this high here, let's look to the right screen now. We had a run on a previous macro high, and that allowed for a retracement. Once we ran this, I moved my stop loss to this low, and then I was looking for re-entry on the E-mini. Now, when we got into the 10 a.m. macro, we got to recognize that this right here is when things got a little funny. Once we ran that high, I want you to zone into this chart over here for a second and look what's happening here. In the middle, you have the NASDAQ. On the bottom, you have the YM. And on the top, we have ES. If we study the lows here, right? First, look at the highs. From 7 a.m. to the high taken out from stock market open, from equity hour, we have a lower highs being made on the ES and NASDAQ, and we have higher highs being made on the US 30. So what does that tell me? US 30 is the strongest asset. So if I see that US 30 is holding and it's already made its market structure shift and break here, right? That's what happened. Market structure shift, market structure break with a nice displacement to return to. US 30 ran buy side, right? And then it's pulling back to its array. So from here to here, this already tells me we want to trade higher. And then we study the lows. Why did S&P run the lows? Notice that you'll see that I had an entry in right here. Why did I take this entry? Because we had a market structure shift, market structure break. This is a mitigation block with a fair value gap, but it's in a premium of the range. And with the S&T, it took me out. But I did not let that change my bias because I believe in my analysis. My analysis was I want to see 39.50 at the minimum for a day trade retracement on the bearish narrative in line with the macro. All that fancy talk is to say, hey, I'm bullish. I know that it looks quite bearish, but with a market structure shift and a submission to time, I believe in the higher time frame direction more than the intraday. So when I got stopped out here, I looked at the S&T. We're flat on S&P, roughly. We're flat, right? Lows are flat. Higher low on NASDAQ, higher low on US 30. Enter this trade, put your stop loss at the low, and then you submit to time. I actually walked away from the screen and just got, an alert when we ran this level here. This was the level I was looking at. Why was I looking at this level specifically? Look at the 30-minute time frame. We have this order block, fair value gap, and a buy side pool here, and with another liquidity pool above it. This is the minimum day trade that I'd be expecting. Anything above this is candy. Okay, it's not to be expected. Okay, I don't expect anything more than this. You know, I'm satisfied. So we're out of the trade, and when you look at everything and go back and take a look, it's all classical. It played out just like it should, and this is a great place to take profit and to now seek trades in another session or another day. But that's pretty much it. That's the trade review today. It was a test of patience and time submission and believing in the algorithm, trusting that the weekly support would outweigh the intraday narrative. And, you know, it's just another opportunity to take advantage of the live trading that we do here in the Good Eats FX webinar rooms here. So if you find value in this video, reach out and let me know what I can do for you if my services could be helpful to you. And I hope to see you in the next live trading.